Today is Monday, May 9th. Hope everyone enjoyed their Mother's Day yesterday. I want to take a look at something that is actually in the media today. A story on MarketWatch about a moving average crossover, and it's not your typical 50 and 200-day crossover. It's more of a weekly signal, and it was the 100-week and the 50-week. It's a little bit different parameters, a lot longer. And just for giving credit where credit is due, this came from a blog called NorthmanTrader.com. So anyway, found it on MarketWatch, and he's quoting this other guy's crossover analysis. And the story is that it's very rare, and it's happened only twice in the last 20 years or so. And it kind of makes sense when you look at the big picture chart, because it's supposedly finding major tops and hopefully major bottoms. But let's start with what everyone's familiar with, the 50-day and the 200-day crossover. And here's the S&P 500. And if you had, let's scroll back here, if you had gone back in time and you say, well, here's the bull market, and there's your gold, or your black cross, your death cross. And you say, well, there's your sell signal. And then you see something like this. So while the signal worked great before the financial crisis, afterwards it didn't. So basically it worked until it didn't. And the same thing I think applies to this new average. So I'm going to flip this now into the weekly mode. Alright, now I'm going to get rid of the 200 line because it's not relevant here. And just for time's sake, I had saved the other average in a different color. So let's put it back into a color we can see. And here's what this guy is talking about. This crossover has happened here. And wow, it does look like it's the end of a bull market and starting a new bear market. So that looks pretty good. A near miss over here, but it didn't. And here's the bullish crossover signal. Of course, it happened right up there. So again, with these moving average crossovers, they're always late to the party, but at least after they happen, you know where you are. And again, here's your bearish signal, which happened probably right around here. So you didn't catch the whole thing, but you were short for a good chunk of the move. And going back in time, same story here at the end of the first bear market, mini bear market, or cyclical bear market. And there's the end of the dot-com bubble right there. But again, if you scroll down here, you look down, the signal happened way down in here. So it's a little late to the party. But let's go back in time. The signal works great now during this great bear market of the 2000, and it's a secular bear market, not a cyclical. We've had cyclical bears and bulls within the secular bear that started in 2000. Take a look at we're going back in time here when we're in a secular bull market. I don't know if that's a near miss or not. It looks pretty close. This is a false signal right here. And of course, right after the crash of 87, a lot of false signals. And look where it tells you to sell. It's a full year after the crash happened. So the crossover itself is not the signal, as it never is. But you get an idea that this moving average crossover was not worth anything during a secular bull. Here it is again and again. Now let's go back into the 70s to the last secular bear. Alright, well, if you think the secular bear started in the mid-60s, there's your first signal. But here's the one I think everyone uses in 1970, or was that 69? The first crossover there, then you got the bullish cross here. So it was late to the party again, but, after it happened, you knew what kind of trend it was. There's your crossover again in the big one, 73. And again, so during a secular bear market, it kind of worked. But now over here, when did the secular bull start? Did it start in the late 70s? Did it start in 82 at that bottom? Either way, here you are back in a secular bull, and the signal is giving you lots of crosses, lots of whipsaws. So the bottom line is, yeah, this could be a signal. I wouldn't ignore it. It's a lot smoother than the 50 and the 200-day, which really hasn't worked in a while because it's just been a very volatile market. So maybe this is a good sell signal, but I just don't want anyone to get hung up on it and says, well, it's been perfect for the last 10 years, 20 years, but it hasn't been perfect over the life of, say, the data that we looked at today. So you got to know your indicator, know where you are, know if it's a bull or bear market, and then you can really start from a much stronger foundation.